Cut the Fiscal Fat.
Hello everyone, welcome back to Cut the Fiscal Fat. Today is Credit Day. Credit is a financial arrangement in which money is borrowed for a purchase and paid back at a later date. It is a pivotal financial tool which can allow you to pay for an expense that you cannot cover with cash, like a new vehicle, higher education, a home, or an investment property. There is a system used by lenders to gauge the risk of potential borrowers, and it is commonly known as the 5 C's of credit: character, capacity, capital, collateral, and conditions. Character, also known as creditworthiness, is how well a borrower has managed previous debt obligations and how much confidence a lender can have in a borrower's ability to repay a loan. Capacity is your ability to repay credit by assessing your debt-to-income ratio. Capital is the amount of money you have and are able to contribute or invest. Lenders may be more willing to approve loans if the borrower has some of their own money invested. Collateral is your personal property that provides the creditor with security if you cannot repay your debt. Examples can be bank accounts, vehicles, or homes. Conditions are the terms of the loan, such as the interest rate, length of the loan, and what the borrower intends to use the loan for. Having good credit can help you get approved for higher loan amounts and lower interest rates, have better options when purchasing an auto or home, obtain affordable insurance, and receive job-related security clearances. And bad credit can prevent you from securing a loan for large purchases, qualifying for renting or purchasing a vehicle or home, qualifying for insurance or affordable insurance, getting certain jobs or promotions depending on your field. All of the information pertaining to your credit can be found on your credit report. A credit report is a record of a borrower's credit history. It is produced by the 3 credit bureaus and consists of 4 sections: personal information, financial account history, history of credit applications, and public records. The information in a credit report is used to calculate a consumer's credit score, which is one of the primary factors that lenders consider when evaluating a credit application. A credit score is a 3-digit number that represents how likely a borrower is to repay a debt. It is calculated based on the information in a borrower's credit report and ranges from 300 to 850. Borrowers with higher scores are viewed as more likely to repay debt obligations and are therefore more likely to be approved for credit and receive lower interest rates. Your credit score is fluid, which means it's constantly changing. These are the components that determine how your score is calculated. Payment history makes up 35%. This is the most important factor in calculating your score. Your payment history is used to predict future payment behavior. Credit utilization makes up 30%. This measures how much credit you are using compared to how much you have available. Credit history makes up 15%. This is the length of time each account has been open. A longer credit history provides more information and offers a better picture of long-term financial behavior. New credit makes up 10%. This is the number of credit accounts you've recently opened, as well as the number of hard inquiries lenders make when you apply for credit. And credit mix makes up the final 10%. This considers how many and the types of accounts you have as an indication of how well you manage a wide range of credit products, such as auto loans, student loans, mortgages, and credit cards. FICO is the standard for credit scores for over 60 years and is used by 90% of top lenders. A FICO score pulls the information from your credit report that is produced by each credit bureau. This summer, FICO is rolling out FICO 10 and FICO 10T. Here is how that will affect you and your score. With FICO 10, the impact of late payments is more pronounced than with prior FICO score versions. This means consumers who miss payments are likely to experience a more severe drop in their credit score. A higher credit utilization ratio will also have a greater negative impact on your score. With FICO 10T, This model starts using trended data over the last 24 months, giving lenders more insight into how individuals are managing their credit. This means that this new model will analyze how you handle your balances, if you pay them in full, if your balances are continuing to grow, and even if you carry balances only during the holiday months. If you took out a personal loan for debt consolidation, but started carrying balances again on your credit cards, FICO 10T can detect this information and it will negatively impact your score. While the model is changing, the strategy is still the same to improve your credit score. Open secured accounts to help establish and/or build your credit. Pay your bills on time. Pay your balances in full whenever possible. Pay off any collections. Keep unused credit card accounts open, unless they cost you money with an annual fee, to help keep your credit utilization rate low. Your target should be 30% or less. Too many new accounts or inquiries can indicate increased risk and can affect your score negatively. Carry a diverse portfolio of credit accounts. And finally, check your credit report and fix any errors. Pulling your own credit report does not affect your credit score. Credit isn't just a score, it's a skill. A skill, by definition, is the ability to use one's knowledge effectively and readily in execution or performance. So in order to utilize credit to your full advantage, you have to educate yourself on all the components of credit, scores, and reports, and adapt or develop a strategy that makes the system work for you. We're here if you have any questions. Please like this video and subscribe to our channel. We've got new content every Monday. Next week is all about protecting your money. Thank you for watching. I hope to see you next week. Be safe, be smart, and go audit yourself.
1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 17, 18, 19, 20.